Profit. I am Mahima Vachrajani and you are watching Ask Profit. Today's Ask Profit is going to be a tad bit curtailed. It will start from 11 o'clock, but before that we have two very interesting managements lined up for you on the show. We'll be talking to Hindalco's management as well as UgRo Capital's management. But before we move on to that, let's take a quick check on how the markets are doing. In terms of the Nifty 50, well, after a huge sell-off that we've seen from FIs as well as DIs yesterday, FIs in terms of almost 1,000 crores, the markets are now catching up. The Nifty 50 is trading almost 0.8% higher, 0.9% higher at the 24,900 odd levels, and it'll be interesting to watch out for as to now when next Nifty will be crossing that 25,000 mark. In terms of the Nifty Bank, doing well in trade today, up by about 0.7 odd percent. The broader markets largely in line with how the benchmarks are doing, so moving in tandem with them. Mid cap 150 up by about 0.9%, small cap 250 up by about 0.6 odd percent. Let's pull up the Nifty heat map and see what counters are buzzing in trade today. There you go. Counters like Indocent under pressure ahead of its earnings, are down by about 1%. Shriram Finance and Kotak Mahindra are the two other counters in the red. Otherwise, all other Nifty counters. So 47 other Nifty counters in the green, led by BEL, 4% up. And this is the second day in a row post its earnings that it's buzzing. Bajaj Auto, again yesterday it saw some profit booking, but today up 2% in trade. M&M, Cipla, Sun Pharma, Apollo Hospitals, Tata Consumer, Ultratech all seeing gains of about 1 to 1.5 odd percent. Let's also pull up the sectoral heat map and see what are sectors doing in trade today. And all sectors in green, led by the Nifty Defence. Nifty Defence up 2.35%. Nifty Pharma also up 1.78%. But Hindalco is in focus. Strong operational performance in terms of its Q4 numbers. Overall numbers did beat estimates, and PAT growth was on the back of lower tax outgo of Novelis. In terms of the EBITDA growth, as aluminium upstream business, EBITDA grew on lower input costs, saw significant reduction in debt as well, and expects to suspend USD 2.2 billion to 1.9 billion in FY26 for maintenance of capex. In terms of revenue, up 11%, EBITDA up 26%, margins up 180 basis points, and net profit up almost 41%. Novelis sales up 13%, adjusted EBITDA down 8%. EBITDA per ton also kind of down by around 9%. We spoke to company's managing director Satish Pai. Let's listen to what he had to say.
Clearly on all fronts, numbers across parameters have actually beat street estimates. Is this kind of performance expected to continue in the coming quarters as well? Because I ask you this question is because this is a business absolutely related to the kind of cycles that we see on the commodity side.
So I always give, the performance of a company is based on how its operations run, how efficient their cost of production is, how good your product mix is. And in Hindalco, we are adding more and more value-added products. So all I can assure you is that on all of the things that we control, which is our operations, our cost of production, our value additions and quality of products, that is completely sustainable and actually will get better every quarter.
Right. Satish, when you mention about the increase in terms of value-added products that could be coming in terms of Hindalco, if you could help us understand in terms of strategy, what percentage of revenues will come in from value-added products and how margin accretive is that expected to be, and what are the kind of timelines you're working with?
So, when we did our analyst show in early April, we actually gave a very clear guidance that we are going to make our downstream EBITDA 4x. So roughly from around 1,000 crore, we are going to take it to 4,000 crores. Now, if you look at it this year, 160,000 ton roll plant is coming up and is commissioning in Odisha. An extrusion plant in Silvassa was commissioned last year and is going to ramp up. A copper inner groove tubes for air conditioners is commissioning in Baroda. An AC fin plant is commissioning in Taloja outside of Bombay. So we are adding nearly 250 KT of value-added products into our mix over the coming quarters. So I think this is where the additional benefits and the additional EBITDA is going to accrue to Hindalco over our upstream margins.
Okay. And along with this, in terms of where the copper business is concerned, we did see a marginal decline that did come in terms of the copper EBITDA. And this is despite the kind of higher shipments as well as revenues that we saw. From here on, what's the outlook looking like in terms of FY26?
Yeah, so as you rightfully said, TCRCs, which is the conversion and refining margins that are given to custom smelters like us, has come down quite a lot. So I think that this year we are guiding that the copper business will do about 600 crores a quarter. And what is helping us is that the copper value chain is very diverse. So sulfuric acid prices are good. And we are doing quite a lot of value additions on top of copper cathodes. So copper wires, copper tubes that I just mentioned, copper alloys for the railways. So we have a wide range of downstream products on copper that we are releasing to the market. And hence, even with low TCRCs, we are quite confident that we'll have a 600 crore per quarter EBITDA for the copper business.
Okay. And in regards to Novelis as well, the performance was pretty strong because the shipment volumes have seen a growth on a sequential basis, though remained flat on a year-on-year basis. However, which are the segments that are driving Novelis, and where are you seeing the pressure, which could probably be a risk?
So if you look at the tailwinds, what is the tailwinds of for Novelis today is the can demand is extremely strong. We are actually completely sold out. The second thing is the scrap spreads that had tightened in Q2, Q3 have started to ease off. And in fact, we are starting to see scrap spreads improve. So these are two important tailwinds for Novelis. If I look at the headwinds, the auto demand in Europe has been a bit weak, with the economy there being a bit weak, and also because of the tariffs situation with the US. And the other important headwind for us, which we are hoping will get resolved very quickly, is the Canada-US trade agreement, because we have a plant in Canada that supplies to the US, which is a sort of a headwind today because of the 25% tariffs, but which we are hoping will get sorted out when the USMCA 2.0 gets signed.
Okay. And any impact that you're seeing currently with regards to where the tariffs are concerned?
As I said, in the India business, we don't see any impact. The only thing I just mentioned was the US-Canada for Novelis.
Okay. And what will be the quantum? That's what I meant to ask.
So we have already been on record saying the quantum could be in the order of about 40 million.
Okay. Apart from that, overall, if you have to look at the coal mix for 25, even 26 you've mentioned will remain similar to 25, but things will only change post commissioning of Chakla as well as the Bandha mines. What's the timeline for this, and how does this impact in terms of finances?
See, our opening of our coal mines is very important in the sense that it gives you, for the next 20-25 years, a steady cost of production. Because even though coal prices this last year have been very favorable, but we are still exposed to what could happen in the market when we go in for auctions, linkage, or spot. So I think the biggest thing for a smelter, if we have Chakla and Bandha open up, and by the way, they are all going to open up in the sort of January, February, March of 26, it gives us a very steady cost of production for our aluminium business, which I think is going to be very important for our long-term profitability going forward.
Okay. Apart from this, Satish, the foray in terms of where EV goes, 10,000 units is what you've already looked at. What's the kind of order book that you already have in place from here on? And what is the strategy with regards to this business?
See, we are involved in the EV chain now in quite a different few things. Let me run. So that 10,000 units that we announced, that plant capacity is 6,000 units a month. So that's for one customer. The second customer is already talking to us of setting up a line of equal capacity. We are just going to commission sometime by November of this year, aluminium foil that goes into the lithium-ion battery. And we are then very quickly going to put up a copper foil plant. So copper foil, aluminium foil for the lithium-ion battery, aluminium battery enclosures for electric vehicles. So our portfolio in supporting the EV chain in India is growing.
Okay. So just to clarify on this front, Currently, from the capacity that you have is for one client. Additional capacity is what you're talking about. How long will it take for you to increase for the other clients? And two, what's the order book that you already have in place on?
So that's what I said. Our plant for the existing customer is 6,000 battery enclosures per month, the capacity. The next customer will be exactly of that same order because the units are quite modular. And that will take us about 8 to 12 months to set up.
Okay. And with the first customer that you're talking to as well, where you have an order book of around 10,000, capacity 6,000, any further orders that are in place, or that's where it is right now?
No, I think, we build a line for a customer. So that line is completely dedicated to them. So they will use that fully.
Okay, understood. Overall, if you have to talk about the capex as well from here on, what is the kind of spends that we should be looking at in this year and the year after, that's FY26 and 27, and what's the fundraise plan for the same?
So let me give you an overall view, which we gave to the analysts during our capital markets day. So our plan is to spend 45,000 crores over the next 3 to 4 years to largely increase our upstream capacities, expansion in aluminium smelter, a new copper smelter, an alumina refinery, a copper recycling plant. So those capexes are going to be spent over the next 3 to 4 years. This year's capex guidance is around 7,500 to 8,000 crores. So it's about $1 billion. Next year will probably be even larger than that, but I'll give you the numbers when we meet during Q2 or Q3 calls. So in short, we are going to be on a big capex and a capacity expansion plan over the next 3 years because our balance sheet is very strong. We have a treasury of 16,000 crores and our net debt to EBITDA is negative in India.
Got it. And taking that into consideration, Satish, we've already seen a good amount of debt reduction that's come in this quarter as well, right? So what's that target net debt to EBITDA ratio that you're aiming for, taking into consideration the heavy capex plans that you already have in place?
So what we have committed to is that the India business will not breach 1 to 1.5 times net debt to EBITDA. I mean, today we are at negative, but when I look at over the next 3 to 4 years with our large capex plans, that is the sort of net debt to target that we have communicated to the street.
Okay. And very lastly, any trends and outlook that you're picking up with regards to where key raw materials go for FY26? What are you baking in, taking into consideration that we did see a remarkable increase in the EBITDA per ton this time around, if I have to talk about aluminium upstream, right? So overall, aluminium upstream plus the other raw materials, what's the trend?
So it's a mixed bag right now. So what the coal prices seem to be under control. Pitch is also under control, but CP coke and caustic, we are starting to see a little bit of inflation. Furnace oil has come down because oil prices have come down. So net, if I have to summarize, Q1 cost of production will be flattish with Q4. So some things are going up slightly, some things are going down slightly. So we are not seeing any big inflation in input costs right now.
Well, that's the conversation on Hindalco. We'll switch focus though. The big conversation today is with regard to UgRo Capital. Why is it big? Is because they've done a large fundraise. Now, for an 1,800 crore market cap company to do a 1,300 crore or announce a 1,300 crore fundraise is certainly extremely large. And for that, we have with us Mr. Sachindra Nath to understand as to what this is all about. And this is an exclusive chat with NDTV Profit. So thank you so much, Mr. Nath, for taking out time and coming in and speaking with us live from our studio. So I want to first start off, explain the dilution to us because it's a large dilution at sub one-time price to book. So explain the dilution itself, what was the thought process behind it, plus you've done some instruments in June of 2024. So when I'm combining those two, the dilution is very, very large.
Yeah, no. So thanks for giving the opportunity to explain. I think it's important for everyone to understand that why we have done it and what's the method. So look at this way. We were at around 6,000 crore of AUM in 23. We were at 9,000 crore in 24. In June of 24, we raised total capital commitment of 1,265 crore, of which around 250 crore was in form of equity, and we did 1,000 crore worth of warrants. That was done at a price of 265 rupees. And those warrants conversion is in the month of December. Every time when we reach near about 20% of capital adequacy, philosophically we raise new capital so that it continues to give comfort to the lenders, to the regulator, and we continue to do our growth because this company is growing, sequentially.
Sure.
So we reached around 19% capital adequacy end of March 24. When in December, if these warrants would have converted, then we would have reached back to 26-27% capital adequacy. What we thought that given that now traded price is much below the warrants, the possibility of warrant converting and not converting depends upon the share price. Now we are an operating company, and as an operating company, our capital cannot be dependent just on share price.
Sure.
So we thought that it would be very good that we go back to the investors which have invested in the warrants and give them the option to infuse the same amount of capital in the company now. They benefit from the price. We benefit of locking our capital today and continue on our growth journey. So that's the logic. So I don't think so you should look at this double dilution. You should look at this as a replacement dilution of against those 1,000 crore of warrants. We have now issued fresh capital of around 915 crore. We had to do a right issue because we wanted to be equitable and fair to every shareholder. So the incremental dilution, if the same warrants would have converted at 265, which now money is coming at 185, leads to around additional 4% dilution. So we have done a right issue at the same terms, so that every public shareholder also have the opportunity to invest in a growth company. And that's a little bit of additional capital. So my presumption is that this is the same dilution. At that time we were diluting 25%, this time we are diluting 30-odd%.
Point taken. So sir, you're giving benefit of the lower price to institutions. Of course, they had the option of subscribing to the warrants or not. How much of the warrant money did you receive upfront? And isn't it ideal that you ought to have raised equity back then, therefore, at 265?
Yes, I ideally, yes, of course, why not? So look, in June of 24, when we raised that capital, you'll remember that was a point in time where multiple NBFCs were getting banned. Market sentiment around NBFCs were it was very hostile. And that's why we, raised what capital was required. So we raised 250 crore of equity. We raised 1,000 crore of warrant, of which 25%, which is 250 crore came, and 500 crore got added to our net worth. Investors were also, making a choice that in a very, turbulent time, they were taking the optionality of giving us the money, but they were protecting, their risk. And look at what has happened that, since then the market and NBFC market have come down, and our prices also come down. So they made that choice of taking that risk, and we raised capital through that structure. And that's okay. And from now, but if you look at our operating performance, we have delivered what we have promised. We have moved from 9,000 crore to 12,000 crore. We have moved our profitability. Our ROEs have improved. ROE has, because of the capital raise, has not gone up further. We have delivered high credit quality. So in fact, there's a lot of narrative. In the morning when I woke up, I was reading. People said, oh, like microfinance company, this company is raising so much of capital. There's big, problem or NPA is coming up. Think of this way. Two of our, largest institutional investors, Danish government, which is, sits on our board, is committing 150 crore. Samina, which is existing 7% shareholder, sits on our board, are putting 500 plus 150 crore of capital. Why in the world and two, global institutional investor would put more money into the company if they will not see the growth potential or they will see trouble in the company? Nobody does that, right? Because
is there a concern, sir, from some of these investors because your stock has taken a bit of a beating? You used to trade at 1.3, 1.4, at peak even 1.5 times book. Yeah. And I'm talking trailing 12 months. You're currently trading sub 1 time.
Yeah.
So is there a concern that any of these investors have expressed? Is there a due diligence which they've done, they've spoken to you about?
So no, so that's what I'm saying. If you look at of the total current capital which we are raising, almost 60% of that is coming from investors who are, on our board actually, right? So they see and look at this company on an every quarter basis. So obviously they are super confident, and that's why they are using their option to double up on their investments. Second, I think so it is the market price, in my presumption. Sometimes it's very hard for broader market to differentiate. So in a market scenario wherein SFBs, microfinance companies, there's so much of happening around that. I can keep saying that MSME financing, we keep saying this tagline, MSME अच्छा है, बिल्कुल अच्छा है, but for broader market to then pinpoint and say, no, this company is really different, sometimes it's very hard for me to control that narrative. Over a period of time, I think so we have to deliver what we have to deliver, and market would react to that. But financial institutions, whether they are bank or NBFCs, if they are independent, have to raise capital to make sure that capital for growth, for capital adequacy and lenders' comfort remain with us. And I think so we have ensured that. We are hopeful that this size of capital raise would improve our ratings, will reduce our cost of borrowing, and our operating performance would continue to improve. We have invested very, very heavily in our operating infrastructure. In last year itself, we have added roughly around 100 plus location. We are at 270 plus location. Our emerging market channel is growing. We are super confident that over the next 2 years, we will deliver a very high performing business, and will continue to grow MSME financing in India and make this as a leading MSME financing player in the country.
I take your point on that, sir. Sir, tell us, you've spoken a couple of times about how the dilution is just 4%.
Extra 4%.
Extra 4%. So you're saying versus last year's dilution, the dilution will just be 4%, but that's the base case. That is if the stock doesn't rebound.
Yeah.
If the stock does rebound, then dilution will be far more.
Yeah, of course, it will be. I hope so that you are right. I hope so stock rebound, and there are two parts of it. If it rebounds and the warrants are still alive, and if they get exercised, that would be an additional capital to company at a higher price.
Sure.
Number two, I think so within our warrant holders, there are, Samina is 50%, right? Post this round of CCD, they will touch roughly around 21%. And as you know, institutional investors don't want to cross 25% because they will trigger open offer and so on and so forth.
Sure.
There is another investor which will cross touch 5%, and as an institution, they don't take more than 5%.
Okay.
And I can't commit on their behalf, but my presumption is that even if theoretically the price goes much beyond the warrant conversion price, some of these investors won't be able to convert. So there will be not additional dilution. And whatever is left, roughly around 200-300 odd crore, even if it comes, we are a very high growth company, right? We should be able to, take that benefit of that capital and deliver, optimal performance to that capital.
Point taken. Sir, you've gone from 19% capital adequacy to 29. You're of course leaving scope for another 200 to 300 crore of possible equity to come in if at all things were to become more favorable in terms of the stock price move. So what happens to your capital adequacy then, and how long will this 29% capital adequacy last you? Because you're fast growing.
Yeah. No, so I think so. Look, there are last 3 years, we have focused on building the franchise for size, which we have now delivered. Every year, we have added roughly around 3,000 crore of AUM and around 1,500 crore of on-balance sheet asset. We have the capacity to go even beyond that. But right now, for this year, also we will grow at the same pace. So I think so we will add another 3,000 crore of total AUM, add another 1,500 crore of our balance sheet. But we have channels and capacity. So we will, I think so at the end of FY26, we should end up at around 24% of capital adequacy, which means we have another, 6 to 9 months of growth momentum which will come. And gradually our ROEs would start improving. So our need of capital, if you grow at 25%, and if your ROEs are in 15%, then capital gap is around 10 odd %. But that would keep improving. So our need of capital would keep coming down because your accreted profit would go up. But even if more capital would come, we have the distribution capacity and the liability capacity. So our emerging market business, our embedded financing business can be accelerated at any given point of time. We have to calibrate our growth. Right now, we are trying to manage or give a very predictable growth targets. Company wants to grow at 25 to 30 odd %, and our core focus is now to improve our return on asset and return on equity. Return on asset would be first, and return on asset is also a function of our cost of liability. Our cost of liability vis-a-vis our peer set is roughly around 150 basis point higher. It is just because of our size, speed, no single parent on top of us. But with this capital, we think so that would also improve. So we are in a very good cycle. Rate cuts have happened. Along with rates cut, with capital raise and hopefully a rating upgrade, that should lead to a better ROA is our expectation.
Is the rate pass-through going to happen in your case? Or will it accrue to you?
Yeah, it will. Some of that would get passed through, but some would so there are two ways to look at it. I think so. One is what rate benefit that come to us because of the cut. That takes around 12 months. But more so, new borrowings which we'll do would be much lower, because when you are at a 30% capital adequacy, you don't pay the lender the same price. You pay much lesser. So incremental borrowing would come at a lower cost.
Point taken. So absolutely any concern with credit quality, as you correctly said, there was some concern, at least within certain pockets in the analyst community, that is this possibly an issue with regard to credit quality? Are you willing to absolutely come out and say this is not a problem with regard to credit quality whatsoever, and that you are absolutely clean in terms of book?
So there are two parts to it. One, maturity of the portfolio. We have designed UgRo for a total credit cost of 2%. And we have designed our different asset line for certain level of GNPA.
Sure.
So our prime business operate at a secured operate at a GNPA of 2%, business loan at say 4.5%, micro enterprises at 3%, embedded financing at 1%, and machinery at 1%. By maturity of the portfolio, definitely, some of this would flow. We are at 1.5% of credit cost. As the portfolio will mature, it will hit 2%. But beside that natural progression, we don't have, and I can tell you with a certain amount of commitment, we don't have ballooned NPA which has not been disclosed. We don't have to take massive write-off. So take my words for it that if somebody thinks that I can raise institutional capital to take a future write-off from set of the same people who are in the company, that's not right. I think so. We will continue and we will make changes. I think so. The market continues to change. So, for example, business loan segment we felt is under pressure. We have brought down its volume from 225 crore a month to now 75 crore a month. We would make corrective changes to reconstruct our portfolio, but we would be in the range of around 2.5% of gross NPA and around 2% of credit cost and we will try to make sure that we will deliver consistently over a long period of time.
Thank you so much, sir. This has been a good conversation. It's been a tough conversation, but you've been candid, so I appreciate that. Thank you. With that, what we're going to do is we're going to slip into a very short break. More on the other side. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit. As I mentioned at the start of the show, that's slightly a curtailed session today, but it was very important to have both of the management conversations that we had earlier on the show, that is Hindalco as well as UgRo Capital. Let's start with the first question of the day, and also welcome in Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, joining us. And we'll also be joined by Rajesh Agrawal of Om Capital, joining us soon. The first question is from Rajesh Maheshwari, who's writing in from Indore. His query is on HDFC Life. He's bought 300 odd shares at an average price of 375 and wants a short-term outlook on this particular counter. Whether hold or exit is the view that he wants. Vaishali, I'll come to you on this one. What are the charts indicating?
Very good morning, Mahima, and very good morning, Rajesh. I think the stock is pretty much intact. It could probably give a breakout also, but I would say keep a stop loss of 720 because it could cause a reversal below 720. And if this breakout sustains, it can go towards 800 to 820.
That's the view with regards to where HDFC Life stands. The next question is from Mohan, who's writing in from Dubai. He's holding 3,300 odd shares of UgRo Capital, bought at 241 a piece, and wants a short-term outlook on this particular counter. Considering the kind of fundraise that the company is doing, and that will lead to dilution in terms of the overall equity, the street is not taking that very well right now. The stock, although has recovered a tad bit, trading around 0.4% lower. But Vaishali, with respect to where charts are concerned, what are the charts indicating? Is there a momentum going forward from here?
Well, currently there is no momentum, but the stock has fallen from 320 levels. We saw it going towards 150. Now it's trying to make an attempt of surging high, and it is sustaining about the 200-day moving average. So I would say keep a near-term support of 170. And if the stock moves above 193, 195, in all likelihood, this can go towards 210 to 250 levels. So that would be my view. Keep a stop loss, and let's see if it gives a continuous bounce.
All right. So, by the way, we just had a conversation with MobiKwik as well this morning. I'd invite you to check that out. We've got Krishna from Mumbai asking about it. Bought at levels of 517 rupees per share. And since it is a recent listing, we're not going to immediately have a view on it. We'll have to circle back to it. In the meanwhile, let me come to you, Vaishali, on Hind Zinc. And this is a question from Jayshekhar, who's asking a question from Chennai. He's got 105 shares at a price of 512 rupees per share. He's planning to hold for a period of 2 years, and he's wondering whether to hold or buy more at this juncture. Good morning to you, and what's the view on Hind Zinc?
Hi, good morning, Alex. So yes, I would agree. The stock has fallen right from 800 levels to now, hovering around between 400 and 440. So technically, I would say that he can add more to average out his cost and wait for the stock to move above 480 levels. And then we can see a good run up coming from this, probably going towards 550, 580. So I think good levels to accumulate from here.
All right, so that's the view with regards to where Hindustan Zinc stands. Next question is from Prashobh, who's writing in and wants a short-term view on LIC Housing Finance and wants to know if the right price to buy is at 600 or not. The stock is currently trading at 590 odd rupees. Vaishali, what's the view like for LIC Housing? What are the resistance and support levels that you see?
So I would say right now the support is at 550 and it's a narrow range. I mean, going above 635, 640. So once we see the stock moving above 640 levels, it could get into a further run.
And we've got several questions that are coming through. The next one is actually an interesting one. Do we have Rajesh yet? Okay, we have Rajesh. Very good morning to you, Rajesh, and thanks so much for joining us this morning. We've got a viewer who says that he's a novice investor. This is Ronak Panda who's writing in, and he's looking at purchasing IDFC First at this point. Given what we've heard recently about this entire conversation about the board seat for Warburg, Pincus, everything that's happened since the fundraise, since the results, the question marks about asset quality going forward, maybe a little pressure on the MFI book, the microfinance is what I mean. Would you deploy at this juncture?
Good morning, Alex. Good morning, Vaishali. Even leaving apart all those controversies which have been there in the recent past, in the last week or so, on the valuation parameters also, I would not deploy my money in IDFC First Bank at this juncture, I would say. Because whatever improvement in results in the last 3-4 quarters which we have witnessed has already been discounted in the prices. And any meaningful upside from here would need a lot of extra workings on the numbers front, I would say. And with the kind of controversies going on, the kind of concerns on the asset quality and NIMs going forward, even the MFI book, which we have seen on other banks too going for a problem. So I would rather avoid that at this point of time. In banking space, there are better names to go ahead if somebody was looking for deploying new funds. Maybe in the private sector bank, HDFC Bank or a Kotak is a good bank, or in a public sector bank, you have likes of in the large cap SBI, of course, and mid cap Bank of Maharashtra. These are better banks than IDFC First Bank on valuation parameters, I would say.
Okay, so that's the view with regards to where IDFC First stands, and of course the banking sector and the pockets that Rajesh likes in the banking space. All right, the next question is from our first caller for the day. Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Dixon Technologies.
Okay.
So I'm holding 39 shares of Dixon Technologies at 16,000 at least.
Okay.
So should I continue in the same counter for good returns for another 6 months, or should I shift to some other counter like L&T or Power Finance? Is my query, ma'am.
Okay, Dheeraj, I just want to clarify: is that 16,000 or 15,000?
16,000.
16, right?
Yes, I bought it yesterday. I bought 11 shares yesterday and the remaining 28 shares today, sir.
Okay, so your average holding is 16,000. Incidentally, Dheeraj, thanks so much for that question. Is this a long-term perspective that you're seeking?
For the next 6 months or 1 year, sir.
6 months to 1 year.
Depending upon the returns. Like I'm expecting a target of around 19,000.
Understood.
In the next 1 year.
In the next 1 year. Okay. Incidentally, we've got a lot of questions, understandably, on Dixon Tech because it's in focus. By the way, it's recovered from the low point of the day. But we got Srinivas from Hyderabad who's wondering whether it can be bought at this current juncture because of the downtick in the price. We've got Raja who's writing and asking whether it's the right time to enter from a perspective of 1 to 2 years. So let's get a holistic view on Dixon Tech. First, let me come to you, Vaishali, on the charts. Generally, they say not a great idea to deploy when the stock is falling as dramatically as it is, because that's the very definition of trying to catch a falling knife. Would you say that is this case, and would you wait for certain levels?
I would not say that, because if I'm looking at the long-term chart also, I think it's done with its corrective move. But, well, I would say 15,000, 14,800 acts as a very crucial support band to maintain a positive bias and to maintain that the uptrend is intact. So the view gets negated if 14,000, the stock goes below 14,500 and sustains below that. So in my opinion, well, this was the result impact. the way the meeting has taken place today, but it's bouncing back. So I would say keep a stop loss of 14,800 and wait for the stock to surge back, because above 17,000, I do agree that it can go towards 18,000, 19,000.
Okay, understood. All right, so that's a perspective on the technical charts. Let me also get the fundamental view. Rajesh, I think, and this is based on what has occurred so far in the market, the reaction to the numbers, which were fabulous. Even if you remove that exceptional item, 250 crore rupees that they've gained, the revenue increase is quite substantial in the mobile business, and 4.3% EBITDA margin in the quarter gone by. We spoke with the management earlier. I know it was a pretty short conversation, but they're saying that they are able to move levers as required to cover for even a possible eventual loss of that PLI benefit, which contributes about 0.6% to the margin. So from that perspective, based on valuations, would you say that it's still attractive, or do you think it's pricey right now and wait?
See, in fact, Alex, I was surprised by the move which the stock gave today. Because yesterday evening, when we looked at the numbers, we thought that it was fabulous numbers, no doubt on that. The numbers are pretty good when you compare quarter to quarter, even year on year. So at least I thought that in the morning it would give a move, but I was wrong. Stock went down. And now coming to valuation, the only concern about this stock is valuation, because at this point of time, it's trading at around 80, 82 times earnings, and that's a concern going forward. Otherwise, I think the company has done well. The numbers have been good, margins are improved, and going forward with a kind of movement in the EMS space as such, and the mobile business also. I think this company can do well in the future. That's somebody trying to hold for maybe 12 to 18 months would be a good thing to hold. But in the short term, I think the valuation concerns would be there. Trading at 80 to 85 times earnings, that would be a concern, because there are a lot of stocks available in the market which are at decent valuation at this point of time.
Right. I think valuations is one big concern. Plus, I think even in the con call, when I was going through the notes, I saw that there was some delay in terms of its backward integration implementation. That is probably not being taken well by the street, and probably that's one of the reasons as to why the stock is
They spoke about
down.
that actually to us, and they said that those efforts are ongoing. What I found interesting, Mahima, is the fact that the management thinks that there will be improvement in margins, but not on 4.3%.
Correct.
On the 3.9% that they achieved in FY25, they expect a margin improvement. So that kind of gives you an understanding that 4.3% se badhne nahi wala hai.
Correct, got it. All right, let's take the next query then. The next query is from Krishna, who's writing in from Mumbai. We addressed this earlier as well. MobiKwik is the counter. Krishna has bought 150 odd shares at an average price of 517. And he wants to know as to what should be the prospects of this company going forward. He's sitting on a loss of almost 36,000 rupees right now. Rajesh, what's the view like for MobiKwik?
See, we are negative on this stock. We think even after this kind of fall, further fall cannot be ruled out. So it's better to try to exit on any upside which one gets to the market conditions. Fundamentally, whatever has been there in the fundamentals has already been discounted, and even at these levels, we are a little skeptical of the stock. So it's a sell from my side.
Okay, earnings came through, of course, and we did speak with the management. I'd invite you to have a look at the conversation that should be posted on our social media platforms not long from now. Avi is calling us from Kolkata. Very good morning, Avi. How can we help you today?
Hi, good morning to all of you.
Yes.
I'd like to look at a fundamental and technical view of Northern Capital Limited. So I've got 1,000 shares bought at 173. So what could be like 6 months to 1 year target?
Okay, so it might be a little difficult for you to get you a technical view, but let me go across to Rajesh on the fundamentals. Rajesh, Northern Arc posted its numbers not too long back. If I remember correctly, there was certain pressure on asset quality, and so that had a bearing on the numbers. Would you suggest holding for the long term?
What I would suggest is to book at least half of your holdings into this and move your money to maybe a Geo Financial or Poonawalla, which are better into the NBFC space at this point of time. At least if you are having a time horizon of 2 to 3 years, you would be best buy in the entire space.
Okay, so that's the view with regards to where Northern Arc stands. The next question is on Exide Industries. Rohit from Bengaluru has around 2,000 odd shares at the levels of 534 and wants to know as to what will be the one-year outlook for this particular counter. Vaishali, I'll come to you on this one. In terms of Exide Industries, what are the charts indicating? And for a longish term outlook, what's the kind of support and resistance that you're observing?
I would say this stock is consolidating for a very long time after a recent fall from 540 levels. So I would say, the stock can do well. 360 would be the technical support. And the first hurdle comes to 420. Since it's a longer term outlook, I would say buy with these support levels. If you have bought at higher levels, one can average out also at these levels and look for higher targets of 440 to 480 levels.
All right, so that's with regards to Exide. Our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Very good morning to you and all other panelists and anchors, co-anchors. I bought Pearl Global Industries,
Okay.
500 shares at the rate of 1290.
Okay.
And the results have come, it seems to be good. And compared to peer comparison, and it's the cheapest stock as well as on ROE basis also, second, very good ROE.
Okay.
Can I hold it? Does Bangladesh import, they have factored Bangladesh and Countermall also, I'm told. Is Bangladesh factory, I don't know how it will affect the curbs import curbs by the Indian government.
Correct.
But generally, if you look at the garment industry is looking back, can I hold it or switch to some other industry like metal industry like Kirloskar Ferrous or Lloyd Metals,
Okay.
which also have a good future prospects considering their backward integration of mine.
Okay, got your point, Murli. You've always been, at your A-level game when it comes to research. So we really appreciate that, Murli. I'll take this up with Rajesh. Rajesh, Pearl Global is the company, and as Murli rightly pointed out, right now India has the Bangladesh +1 strategy, plus the UK FTA might also be positive in terms of Pearl Global. What's the outlook like? And if not this counter, then should he shift to something like a metal, something in the metal space? And if yes, what should be the counter?
See, there are two different sectors we are talking about. One is Pearl Global, which is into textiles and garments, I would say, and Bangladesh factor is, yes, it's playing out. FTA, UK FTA is also playing out. But as far as the Pearl Global is concerned, I think the valuations are on the higher side at 1,300 rupees. Much of upside is not seen fundamentally. Due to markets condition or news flow, it may go up to 1,400, 1,350, 1,400, but that would be a long call to take. It's better to book out at these levels. If you want to be in textile to take benefit of, Bangladesh and UK FTA, the better names in the sector, I would say, Vardhaman Textiles being the best. So you can have a look at Arvind. These are two in the textile space. But if you talk of metals is governed more by China factor, and there are news flows coming in that China might go for a stimulus. I don't know whether that is true or not, but if that comes true, metals would be on fire for a short term. Otherwise, also metals are in good demand. Companies are doing well. Numbers have been decent, I would say, with the exception of one or two companies. And they have done capex with the kind of infrastructure focus of the government. I think metals are going to do well, out of which I would like to recommend either a Hindalco or a Jindal Steel and Power in the large cap space. In the mid cap, you can have a look at Lloyd Metal.
Okay, all right. And incidentally, that's exactly what Murli was asking about. Lloyd's Metal was one of the counters that he pointed out. Sell is a call based on the way that it's run up. Pearl Global is what I'm talking about, of course. By the way, we spoke with the management immediately after that UK FTA was signed, and they had indicated that they are moving a certain amount of production to India to benefit from the tailwinds that will come through from the UK FTA. The next question is on Orchid Pharma. And Revati from Madanapalle is asking about this. Can it be bought at the current market price? Vaishali, on the charts, what's the view?
I would say, well, right now there's no clarity. Only thing that I can talk about is it's taken a good fall and it's in deep oversold. So I would say if you have a fundamental backup on this, 680 acts as a support. And I think the clarity comes only about 850, 900 levels. So I would say observe a range of 650 to 900. And that's the way I would look at it. I think Rajesh would be in a better position to answer this. So I have no fundamental knowledge.
Yeah, okay. Rajesh, very quick view on Orchid Pharma. Would you suggest a buy at this price?
It's a avoid. The company went for capital reduction, hands changed, despite that numbers have not been improved. It will take at least 2-3 years to show some meaningful return. So it's a avoid at this point of time. Maybe a Cipla, Dr. Reddy's or a Divi's would be a better pick.
Pharma pack looking good, up about 1.7% in trade today. And by the way, we haven't addressed it, but the markets have recovered quite substantially from the low point of the day. Let's see, let's pull up the intraday chart for the Nifty 50. Okay, so it's holding on about 0.9% higher, thereabouts, and very dramatically different from the start. If yesterday the tone and tenor shifted to the downside, today the tone and tenor shifted to the upside. Let's see whether that holds true for the rest of the session as well. We've got our next caller, Nagarjuna, who's calling us from Andhra Pradesh. Very good morning to you, Nagarjuna. How can we help you today?
Sir, very good morning, sir.
Yes, good morning. Please go ahead.
I bought 1,000 shares Paradip Phosphates at the rate 96.
Okay.
Can you please tell me the view on the stock, sir?
Okay.
Is it hold or sell?
Okay, and do you have a long-term view when you bought it, which is a very attractive level? Did you buy it from the perspective of the long-term of fundamentals?
Long-term fundamental as well as the profit booking somehow.
As well as, sir? As well as what?
Profit booking somehow.
Okay, I'm not able to hear you, unfortunately, Nagarjuna, but I'm going to get a long-term view from Rajesh on this one, Paradip Phosphates. What is the opinion on this particular stock, Rajesh?
It's a hold from a side. The numbers have been good. The company is doing well. At least a target of 180, 190 is quite possible in the next 6 to 9 months. And by any chance it falls to 140 due to market condition, one can even add to that. At this point, one can continue to hold.
Okay, let's take the next question on Sterling and Wilson Solar. And this is a question from Sulochana, who's writing in from Hyderabad. Hi Sulochana. The question is from a 2-year time frame, and the renewable energy play is what she's looking to address here by this acquisition. Is a stock that has been under pressure for various reasons, Rajesh. Must remember that there is a significant ownership by Reliance Industries now. Would you suggest a fresh entry at this point?
On the contrary, I will suggest an exit from this counter, because despite the fact that Reliance has a ownership, company has not been doing well, and the renewable energy, yes, there are a lot of players which are doing well, and a better names will be at Tata Power. We are good bet in these levels. So why not switch from Sterling to Tata?
All right, so that's the view with regards to where Sterling and Wilson stands, and in fact the power companies. Our next caller, Gary, is calling in from Agra. Gary, a very good morning to you. How can we help you?
Good morning to you and all the experts over there.
Go ahead with your
question. I'm holding some position in Vodafone Idea.
Okay.
I have equity in Vodafone Idea, about 20,000 shares, bought at different levels.
Okay.
So my average is about 8 rupees. So my question is that as the government holds a large portion of that company, the government actually owns that, which is on almost about 50%. What do the experts feel about the company? Shall I hold the position or shall I just book the losses?
Okay. Just wanted to clarify, is it 30,000 shares or 20,000 shares?
20,000.
20,000 shares. Okay, got your point, Gary. I'll take this up with Rajesh. Rajesh, I hope you've heard his question. Plus, the kind of AGR overdues verdict overhang also on the counter. What's the view like? Should he continue to hold?
See, it's a very difficult thing to suggest, because we all know the fundamentals are in a very bad shape. Quarter on quarter, the numbers have been pretty bad. ARPUs are much lower than the industry ARPUs. 5G, forget about 5G in various regions. 4G is also not working. Their management has said they are moving into 5G and all. But the management has also categorically said that if the EGR thing is not solved, the company, they won't be able to run the company for too long a period of time. So there's a lot of negatives going on. At this point of time, I would add a little bit of technicals to this and say that you keep a stop loss of 5 rupees and continue to hold. to exit at around maybe on any jumps to 8 rupees.
On any jumps. Let's talk about Ganesh Benzoplast quickly. Let's run through a couple of questions if we can. We've got Yashoda, who's writing in from Bengaluru and bought at levels of 118, wondering whether to add more of the current levels for 1 year. What's a quick view, Vaishali?
Ganesh Benzoplast, just a minute. Yeah.
In the meanwhile, we've also got RVNL, and this is a question from Guru, who's asking whether it can be bought at the current price. It's posting its numbers today. Rajesh, very quick view on RVNL? Add. Okay. Vaishali, the view on Ganesh?
I would say keep today's low as stop loss because the stock has just fallen and it has come to its previous low. So if it breaks the 100 levels, then exit because that could trigger further sell, or else wait for it to bounce at least to 120, 120.
Okay, all right. On that note, thank you so much, Vaishali, as well as Rajesh, for joining us on today's show. Pleasure having you as always. All right, that brings us to the end of this edition of Ask Profit. It's been a curtailed one, and that's understandable considering that we're in the mid of the earnings season, but we've got more lined up for you in just a bit, starting with Know Your Company. Do stay tuned. From Mahima and myself and the team that put this show together, thank you so much for watching, and this is NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to see